Morgan, it's a miss on the top and the bottom line for Tesla. We're going to start crunching the numbers within the numbers, but let me give you the top and the bottom line. First of all, bottom line, they earned 45 cents a share in the first quarter. The street was expecting 51 cents a share, so a miss by 6 cents a share. Revenue coming in at $21.03 billion, light of estimates, which were at $22.15 billion. So, and the top and the bottom line, you've got a miss there. And then one other note regarding guidance on deliveries for 2024. We were looking for a number. We have not come across one yet, except for language similar to what we heard in the fourth quarter, that they expect notably lower deliveries this year, 2024, compared to 2023. What does that mean in terms of specifics? Haven't come across that yet, guys. But again, you have a miss on the top and the bottom line for Tesla. We're going to dive into the numbers, look at things like automotive gross margins, excluding credits, et cetera, and we'll have that for you in just a bit.
So I hate to ask a question, Phil, that has no answer that a reporter can give. But have you seen anything in this report yet that would explain why the stock spiked up almost, 8% initially? Now it's down around 3%. Maybe it's just algorithms out there or some initial anything?
Not yet. Not yet, John. Have not come across something. And there may be something within these numbers that when you start crunching them and going through it and you say, okay, not as bad as we were expecting. Or when you look at the energy storage business, maybe there's some indication of some news in there that will give people some optimism here. But nothing at this point that you can hang your hat on and say, well, that's exactly why the stock has moved higher.
Okay. Well, we know we got 31 pages in this report to go through. So, Phil, we'll let you get back to it. In the meantime, just taking a look, even at page 1 here, John, I mean, they're talking about increased AI training compute by more than 130% in Q1, record energy storage deployment, produced over 1,000 Cybertrucks. We don't really talk very much about Cybertrucks in a single week in April, and talking again about the fact that the future is not only electric, but quote unquote also autonomous, perhaps teasing ahead to that robotaxi announcement we get in August.
Yeah.
I know. You're very skeptical about this.
I'm just saying be careful out there. It's a stock that's being watched very closely. It was initially up like 8, then it was just down around 2.5 a bit. Now it's up at 4. It's going to be a long afternoon for those trading Tesla.
Yeah.
Tesla just reported its 2024 quarter 1 results, and just like Tesla stock investors expected, they were bad. We can't say that we're surprised, since the delivery numbers for the quarter were lower than expected, and Elon Musk himself had said that 2024 won't be a good year for Tesla in the beginning of the year. And yet, despite the fact that Tesla missed estimates, Tesla stock is up by more than 10% after hours. So what's going on? Let's find out in today's video. We're going to walk you through Tesla's earnings report and what these numbers mean for the company and Tesla stock investors. Before we dive into today's video, if you want to keep up with Tesla's latest updates, as well as other large caps, you can follow our Twitter account. We post multiple times a day about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
We've got a little bit more on Tesla's results. Let's bring in Fast Money friend Gene Munster of Deepwater Asset Management. Gene, it's great to have you here. What are your thoughts here? We know the conference call hasn't kicked off, and we only just have the releases, so still a lot of questions percolating. But what's top of your mind here?
Well, I think what it's come down to is there's a question, is Tesla smoke and mirrors or is it substance? And I think the results this quarter are going to give evidence for the smoke and mirrors camp to think that this is just another car company. And I think that there is really little to be gained. I think one thing to be gained is that margins are declining, but they're not plummeting. They actually did a little bit better than expectations, still on the decline, but a little better than expectations. So they're going to survive. They got $26 billion in cash, but this ultimately comes down to is, do you believe? If you believe that the future is going to be hybrid cars and it's going to take a long time, 20 years to get to full electrification, stock's not going anywhere. If you believe that electrification, despite all of its troubles now, are going to accelerate for multiple reasons, and you believe in the concept of autonomy and robotaxi and that they're actually going to get this out, Tesla's probably the best position. They are the best positioned company to deliver on that future around autonomy and electrification. It's a big market, $2.5 trillion market. The smartphone market, $600 billion. And so I think that's what this ultimately comes down to. As the panel has said, stock it's going to move based on what happens on the earnings call at this point, some commentary. I still think the street numbers are coming down for 2024 on delivery, so I think that could pressure the stock tomorrow. But ultimately, this company is going to survive to see this next generation vehicle and to see FSD and see the rising tide of electrification. So I'm still a shareholder. I'm still optimistic. And I think that I just believe in what they're doing from an innovation standpoint.
Do you think the stock movement is justified based on what we got from the release, just on the next gen vehicles and perhaps better than expected margins when everything else was pretty crummy?
No, it's understandable. I mean, you can reason why it's up because people are so desperate for any good news. And given the Reuters reporting more recently that they're canceling this initiative on the 2025 initiative, the fact that they're moving it up, that is a directional positive. But again, I think that 2024 is a throwaway, and stock could keep going down. It could be flat. If you, again, believe in a future of electrification, Tesla is the best positioned company. But as far as this results, my guess is that stock probably fades in the next 2 weeks, finds its ground, and then as we get closer to 25, starts to rebound.
Looking at Tesla's Q1 results, we can see that total revenue decreased 9% to $21.3 billion from $23.3 billion a year earlier, while also falling short of the estimated $22.34 billion. Meanwhile, net income stood at $1.1 billion, below the estimated $1.81 billion, reflecting a 55% decrease from the previous year. As for EPS, it came at 45 cents, when analysts expected 51 cents. The drop in sales was even worse than the company's last decline in 2020, which was due to disrupted production during the COVID-19 pandemic. Additionally, Tesla's auto revenue declined 13% year-over-year to $17.38 billion in the first 3 months of 2024. This decrease could be attributed to the steep price cuts Tesla had to do around the world to boost demand for its vehicles amid tough competition in the EV space. There's also the fact that the EV sector is struggling right now, which is something Elon Musk talked about on the company's earnings call, saying that while the EV industry is facing problems right now, that's only temporary and EVs will still dominate in the future. For any other company, these earnings would have been an absolute train wreck, and they really are when it comes to the numbers missing every estimate. Still, Tesla stock jumped more than 10%, and it all has to do with what was said on the earnings call. That's why we're going to share the key points that were discussed in the company's earnings call, as well as our own opinion on how Tesla's future will look like. So keep watching and don't miss out. Hello everyone, and welcome back to Investocracy.
And Ed, let's start off with the long term here, because I think this is what everybody really wanted clarity on, which is their lineup is stale. Let's just face it. They've got a lot of competition now from all the legacy automakers and whatever the heck China is doing. What they're saying right now, while it's light on specifics here, provide some context here as to where Musk really wants to move this company over the next couple of years.
Well, I think definitively the shareholder deck in the first instance gives exactly what the institutional or Wall Street giants who had a more affordable EV at the heart of their bull thesis, what they wanted, and it gives the larger retail investor base who believe in a robo-taxi future what they wanted. What Tesla is outlining in this shareholder deck is completely consistent with what Dana and I reported Sunday night in the Big Take. We reported via sources that a large body of work went in at the component level and at the production process level to bring a range of more affordable EVs, not just one single model. That is exactly and explicitly what Tesla is saying in the shareholder deck. At the same time, they also are pretty explicit that a purpose-built robo-taxi is coming. You will remember that Elon Musk refuted the idea, first reported by Reuters, that an affordable EV program was scrapped or cancelled. Clearly it's not. Tesla's explaining in the shareholder deck that if anything, it's being pulled forward ahead of their original timeline of late 2025. So there's some consistency there, though you cannot hide from how terrible a quarter the first quarter was for Tesla in the near term.
I'm really interested in that idea of pulling up the timeline here. They said that they will accelerate the launch ahead of that communicated start of production in the second half of 2025. How fast can these things get out there, and how important is it that they get out there quickly?
Yeah, I mean, let's be honest. Elon Musk has a track record of not meeting the deadlines and timelines that he's set himself. He often delivers the end product just later than expected. But I think that what's interesting here is that in the first quarter, clearly the deliveries number missed. And if you look at the financials, both at the top and bottom line, it was not a great first quarter. The strategy of cutting prices to the bottom did not open up new addressable market. It didn't help them improve volumes. So the long-term thesis of many institutional investors is like, look, you need to do what the car industry's always done. Offer many more models very quickly at a range of price points, but particularly low price points. And just reading the specifics of the deck, that's what they say they're going to do.
As of the time of this video, Tesla stock is down by 40% since the beginning of the year, and all Tesla bulls are claiming that FSD is what will save the company. As you'd expect, Elon Musk and Tesla's management were asked about FSD in the call, and they said the technology has advanced rapidly in a very short amount of time. Elon said that almost 1 million drivers have used FSD, and that Tesla has insight into how good FSD will be in 3 to 4 months. Additionally, he said that version 12.4 and 12.5 are so good that they should be called version 13 and version 14. They'd also talked about licensing FSD to other automakers, and this was one of the most bullish things on the call, in my opinion. Elon said that Tesla is currently in talks with one major legacy automaker to license FSD, and they might actually sign a contract this year. Will it be Ford, like we previously speculated? Very possible, but we have to wait for the official announcement to confirm that. Still, Elon made it clear that it'll take at least 3 years for the other automaker to be able to integrate FSD, but mainly because of what they have to do to make it work, and not what Tesla has to do. Next up, perhaps Wall Street's favorite part of the call, and that was Elon confirming that the affordable Model 2 is coming in early 2025 or even in late 2024. He even said that Tesla is planning more than one affordable model, which will use aspects of the next generation platform, as well as aspects of Tesla's current platforms, and will be able to produce on the same manufacturing lines as our current vehicle lineup. Elon also answered questions about robotaxis, including questions about regulatory approval for them, saying that there are a handful of states that have already adopted autonomous vehicles, so the company already has a plan set up for approaching this issue. The company previewed the robotaxi ride-hailing app, and Elon said that robotaxis will pursue the revolutionary unboxed manufacturing strategy. He also said that the robotaxi will be called Cybercab, and that both Tesla and its customers will be operating the fleet, comparing the service to a mix between Airbnb and Uber. Additionally, he said that Tesla spent more than $1 billion in the quarter on AI computing to develop these new technologies, proving once more that it's way more than a car company. In addition to FSD and robotaxis, management was also asked about Optimus and the company's robotics business, and they said that they expect it to start doing useful tasks in the factory by the end of this year, adding that they may be able to sell it externally by the end of 2025. Also, Elon repeated his earlier words on Optimus, saying that in the future, it'll be worth more than anything else Tesla does. They were also asked about the status of the 4680 battery and talked about the current output, saying that 4680 production increased about 18% to 20% from quarter 4, reaching greater than 1,000 a week for the Cybertruck. Management also said that they expect to stay ahead of the Cybertruck ramp with the cell production throughout quarter 2 as they continue to ramp the third of 4 lines in phase 1 while maintaining multiple weeks of cell inventory to make sure they're ahead of the ramp. And because the company is ramping, cost of goods sold continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So, Tesla's goal here is to beat supplier cost of nickel-based cells by the end of the year. Finally, when Elon was asked about his compensation package by an analyst, he said that Tesla might consider doing a buyback to get him to a higher ownership percentage, while returning some cash to shareholders at the same time. Still, he confirmed that Tesla is his main focus, and he plans on seeing the company become more prosperous than it already is. He also said that Tesla will solve autonomy either way, joking about how even if he was kidnapped by aliens, the company will still manage to solve autonomy. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Start with Tesla. Why not? Cheaper models, Do you think they'll do it? How big of a game changer would that be as far as the company's financials are concerned?
Hi, David. Good to see you again. It will certainly drive, number of vehicles, deliveries, and things of that sort. What is being pointed out, and it's very important to realize, is that it could continue to weigh on margins because if a lower price is going to lower the margins. Well, the margins are already walking a very thin line right now. Even though there's a $25,000 vehicle rumored, as you likely know, BYD has one that is as low as $11,000. So will it solve the problem that Tesla faces, which is that in China, they're losing market share? It may not solve that problem. The problem it could solve, which is quite important, is that the United States has been facing high interest rates for a long time. A lot of people want to look at Tesla's stock as a Elon Musk problem. It's not. It's an interest rate problem. That's why we see the same issues around Apple right now, struggling to keep up with being a high-priced device. And overall, a lower-priced vehicle in the United States could certainly help spark some new sales. Again, the margins would likely continue to remain an issue in that case.
Can you tell us a bit more about what they can do in China? I think it was Evercore yesterday that said, they can't really afford to keep slashing these prices because this is really going to wipe out their earnings in the mainland. Do you think the market is properly pricing that sort of scenario?
Yes, it's definitely the bigger deal because you're not going to be able to replace that anytime soon. However, as AI approaches, that's the piece that Tesla's going to have to execute on. So what we're seeing is a moment where it's a little too early for AI software. As you know, AI hardware has been a huge boom with H100 moment last year from NVIDIA. But AI software, we're not in that cycle right now. And that's what Tesla really, truly needs in order for its stock to resume where it was before the Wall Street darling. And that AI software cycle, if I were to give you my best estimate, would be more of a 2026 discussion. So between now and then, they have a China problem. And how they solve that China problem will not be an easy answer for Tesla.
So, Beth, you mentioned if rates are the main culprit why margins have, multiples, not margins, why multiples have compressed and the stock is down, what will be the best determinant whether or not the stock has bottomed as well? Do I look at rates or do I look at margins?
Those two will move together because they have to continue to lower average sales prices to keep up with the higher cost of the vehicle to the consumer. Obviously, the rates make the vehicle more money per month to the consumer. So those two will be in sync. The minute those margins bottom, though, or the minute we start to get a more dovish Fed, this is going to be an excellent buy. This stock is deeply on sale. It's very rare that I can look at a Mag 7 stock that is deeply discounted in the way that Tesla is. If this thing continues to go lower, it's an attractive entry eventually, because this company's not going to go out of business. They're an AI leader if you're patient enough. And all of those come together to don't get too cold, ice cold on a stock like Tesla, which is arguably one of the better top 10 stocks in the market.
You're looking towards the earnings call, it sounds like, more than the actual results, because you want more information about the company's AI efforts and that robo-taxi.
That's right, Frank. And it's interesting. It's the number 2 or the second worst stock in the S&P 500, but Tesla is the number 1 most hated stock on the street. And I love hated stocks. And it's not a contrarian play here. To your point, I believe it's the purest AI play out there. But what's fascinating today is that we will see Elon Musk's feet held to the fire. We want to know about this Model 2. That was the $25,000 car that they were creating and supposed to be rolled out in January. In the event that Reuters rumor, which he did, by the way, deny, that was a rumor, if the Reuters rumor is correct that they are scrapping the Model 2, that will really stop giving people will stop giving Elon the benefit of the doubt. He's been given the benefit of the doubt on so many different fronts, but if they scrap the Model 2, that will be considerable damage to his reputation and how they move forward. But I do believe in Elon, I do believe in the Tesla, and I think the stock has the ability to move about 23% higher back to its 50-day moving average at 177. So I think there's a ton of opportunity here in the stock price, just like when it was on discount sale back in January of 2023.
All right, Jeff, you're hitting us with quite a bit. So first, I want to start off with one of the things you said. You called it one of the most hated stocks on Wall Street. I think you got that from the CNBC stock screener, where you can find the RSI is at 27, showing extremely oversold conditions. I know that's what you meant to reference. But I want to come back to what you said, the Model 2. There was a lot of hype around the Model 2 being, a lower cost option than some of the other EVs. But isn't the thought from a lot of reports is that the Model 2 was scrapped for the robotaxi? I mean, in your mind, aren't you happier about the robotaxi than the Model 2?
Well, I think we always knew about the robo-taxi. So short term, to really find a catalyst to have this stock resume, or I should say to stop its free fall, what it's been in, I think the Model 2 is the paramount issue. The robo-taxi, we always knew that they've been collecting and gathering all this data, and they can flip a switch.
Many Tesla investors' patience has been running thin because it seemed like there's only bad news for Tesla since the start of the year. But in my opinion, this earnings call proved why investors shouldn't give up on Tesla just yet, because the next 2 years will be amazing for the automaker. We just can't deny that fully autonomous vehicles are the future, and it's not just Tesla pursuing this. For example, during the GTC 2024 event, we saw NVIDIA's CEO, Jensen Huang, talking about how the chipmaker would be delivering powerful chips to Chinese automakers like BYD and Li Auto to help them develop self-driving technologies. Tesla's autonomy progress is better than any other car company, and this technology won't just be implemented in Tesla cars. The company will license FSD once it's perfect and implement it in its robotaxis, creating multiple sources of revenue using just one technology. Now, you might be thinking that it could take years before we see a profitable robotaxi network, same thing for Optimus, but licensing FSD alone could increase Tesla's profits significantly. As we mentioned earlier, we already knew this year wasn't going to be Tesla's year, so we can't expect things to turn around right away, especially since Tesla is currently entering its next growth phase with a lot of new technologies and products. There's some uncertainty surrounding Tesla stock in Wall Street, and that's honestly normal, considering the fact that analysts set their price target for the next 12 months, and they want great results right away, but Tesla's next phase of growth could take more than that to achieve significant profitability. One person on Wall Street that really knows Tesla is ARK Invest's CEO Cathie Wood, and she was buying the dip multiple times before earnings, even though many people thought that was strange, because everyone thought that the stock would drop after bad earnings. Cathie's decision was clearly in the right here, as the stock went up. And not only that, she ended up buying nearly another 30,000 shares after earnings, indicating how bullish she is on the company's future. So this isn't a stock for investors who aren't willing to buy and hold for the long term, but for those who are, Tesla stock could be a golden investment opportunity for the company's forward-looking thinking and technology advancements. But what are your thoughts though? What do you think about Tesla's Q1 earnings? Did you buy Tesla stock after earnings? Are you planning to buy more? Let us know in the comment section. If you would like to know more about the latest updates about Tesla and the EV market, then go ahead and click on the next video on your screen. See you there.